The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us. We have the Dow Industrials up 13, Nasdaq up 1, S&P's flat. Gold contract down $4.40 at $12.83 an ounce. We have silver down 2 cents, $15.08 an ounce. Light sweet crude up 14 cents, $56.74 a barrel. Notes and bonds, you get the 10-year down 7 ticks, 30 down 14, trading 10 at 121.21, 30 at 143.21. And King Dollar up 210 ticks, trading 96.815. King Dollar still battling to get to that high once again. Volume's dying on the vine, but bottom line is battling. Euro's at 113.09. The yen is at 111.98. And the pound is at 131.26 to 1 U.S. dollar. And Tesla's all electric up.
Okay.
On the way down. Big time. I mean, this move here in 4 days is pretty intense. So Tesla, you got down 14 bucks, and in 4 days we've just gone from 320 to 270.
Yeah.
That is a hit, man.
Yeah.
Let's get over to our man, Mr. Kevin Hinks at TD Ameritrade Think or Swim. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time. You want to understand option strategies, futures. Great program, Kevin and Tom. Bottom line, if you haven't test-driven yet the Think or Swim platform, come over to our website at TFNN. You can see the banner there. Hit the banner. Bring it up. Set up the account. They'll allow you to trade with paper money. You can follow Kevin and Tom each and every day as they put strategies on inside of this market. Kevin Hinks, what's going on?
Good morning, Tommy. Good morning, Tom. How's everybody doing?
Doing well, man.
We're doing good. We're not freezing like the rest of the country, but we got a little rain down here today, so we got to complain a little, you know?
Yeah, rain. Yeah, you know, my old saying, Tom, is you don't have to shovel rain. So I'm not worried about that as much. But, you know, actually, we got a little warm-up coming at the end of the week, so it looks like at least winter is stopping. We don't even need spring to come. We just need winter to stop.
Hey, March 17th, man. We're here, Kevin. It's all right.
You know, do they celebrate St. Patrick's in Florida?
They do. Big time. Hey, you know what we got now down here? We get a Beantown pub. I mean, there's a lot of people from Chicago, a lot of people from Boston. You know, yeah, there's action down here, man. Yeah.
St. Patrick's Day in shorts. I may have to check that out, Tom.
Totally, man.
Totally.
Totally.
But speaking about shorts, Tesla's move the last couple of days. I heard you guys mentioning it. It's big.
It is, man.
I think, you know, why do you think? I'm interested to hear your thoughts. Why is Tesla getting such a bad rap for evolving their company to produce lower priced cars? It's kind of missing me in that theory, because I think personally, because from my friends that are in the car business, more lower priced cars is how you become profitable, not a few high priced cars.
No. Listen. I've said this to Tom before. I'd never go short Tesla because I think the guy's a genius. I think part of his problem, or part of Tesla's problem, is like the car's getting fixed. Do you know what I'm saying? That like, where do you bring them to get them fixed? And then when we were on their site, Kevin, okay, we had done a deal about, okay, how much does it actually cost to get it delivered? And it seems like it's a lot more than is always advertised.
And this was before
well,
they
welcome to the car business, right?
Yeah,
it's
yeah,
never
right.
the one you see on TV.
Right. You know, so we'll see where it shakes out.
Just to add to it, so I see it as kind of Tesla, though, recognizing and putting out to the public, though, that their business plan is not what they've been touting. As in, they said they could make these cars at that price, and they said they could do that while they had stores. And now they can't have those types of margins with stores. Yeah. And then they just announced the $35,000 car. And you'd think if that was such a revelation, right? That's what they've been saying forever. You'd let the hysteria, the hype of that go a little bit. Well, no, now they're like, oh, and we're going to introduce an SUV like a week later. They wouldn't need to introduce that SUV if the $35,000 car they promised everybody was going to be a gangbuster. So that's not going to be a gangbuster. Their margins aren't going to be there. They're trying to cut costs. That wasn't the plan. They're trying to scramble, and I think that's what the market is kind of fearing here.
Yeah.
Right. I mean, he's got his hands on the wheel of this company, and he is making changes, wholesale changes.
Right.
So what
Yes.
they do, I just think he seems to be maturing and evolving a little bit, although he still has a Twitter problem. But besides that, I think he's making wholesale changes to get this company set up for the long term. I'm not as bearish as the rest of the world seems to be.
Yeah, no, I think it's always great when you can look it in the face and make the decision, and that's what I think he's doing. There's no doubt. Because one of the main reasons this is down this morning, folks, is that there's a story out there that all the help, basically got blindsided on closing all of these down. You
And
know
that's
what I mean?
just because it had nothing to do with their plan they had been talking about.
Right,
And what I still don't understand, Kevin, is how are you going to buy a car if you can't see it? That's what I haven't figured out. So.
Right. Well, he's got a return policy, right? And let's face it, guys, the dealership model, where they basically take commissions off of that, is kind of, it's an older model.
I
don't
agree
know
with
if
that.
it fits the modern day car buyer, but your point about maintenance is such a big issue, right? You got to have somewhere to if these cars are under warranty, you have to have somewhere to take them.
Yes.
Right?
Yeah.
And normally that's the dealership, and that was a big part of the dealership profit model was maintenance.
Oh, yeah.
Like, I know American cars, their dealers make about 2/3 of their expenses off maintenance. Foreign cars, 100% of their expenses are covered via maintenance. Think about that. Foreign cars, 100%.
Yeah,
and that
no,
was
I
told
don't
to me
think-
by a dealer.
Yeah, there's no doubt, man. Like right now, my warranty is getting up in, I don't know, maybe another 5,000-6,000 miles, and I'm going to buy an extended warranty because I don't think you can own a decent car without a warranty. It's like, you bring it in and you're done, man.
Yes.
Do you know what I mean? So the warranty's worth it. And of course, the dealers hate that. Do you know what I mean? You should have seen them in there. I said, I'm buying the warranty. They were going out of their mind, man, because they want to sell another car. They don't want you to buy a warranty. You know what I mean? So that you can see where the profit is. The profit is basically, moving it out, bringing it in, doing the service, the whole ball of wax. So.
But guys, the fancy, sexy names coming out with earnings are all past. But what we're going through right now in terms of retail and what's going on in retail is really fascinating. I think it's the most interesting time, I think, of earnings season to trade. It's like the high-end malls, and you guys have them near you, seem to be doing well, right? The discounters seem to be doing well. But if you get caught in that middle, in between the high end and the discounter, you are getting destroyed. Yeah. And I think that's what you're seeing right now with a lot of these names. But Kohl's, a lower price point, doing pretty well, some of these names. So it's interesting. But we've got the big mother coming up Thursday, and that's Costco. And that we're going to work hard on Costco's earnings coming out.
Yeah, the market's going to be looking at that for sure, man. I mean, because you're talking big box. Where are they going? Costco right now trading at 222, folks. Not bad, huh? Right near the highs, man. I mean, hey, amazing. Folks, right here, 45 minutes from now, you want to see an option strategies, futures. Kevin, you have a great one, safe one. We look forward to the show in 45 minutes.
Thanks for having me on, guys.
Thanks,
Thank
Kevin.
you. Stay right there, folks. Tommy and I are coming right back.
The Taz Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The Taz Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of Taz Market Profile, the Taz Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the Taz Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at Taz has even put together a 12-part video series to walk you through every aspect of the Taz Profile Scanner, which you can find directly on the Taz order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the Taz Profile Scanner by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials are down 55. You get the Nasdaq off 17. S&P's down 4.5. Let's go inside. Yesterday, bottom line, folks, is that the Dow, wasn't down that bad. But what it did do is that it gave up in price pretty tremendously, from the highs to the lows. Coming into the close, you had a little pop back up. What you also had, though, is an expansion of volume. So today's going to be a big day because if we get another expansion of volume, you stay lower, bottom line. That is saying that the turn on a market that wants to go downtown is higher probability. So we'll see how this shakes out. If we take a look at the SPY, what you're going to see in the SPY is that what we had out here is that, last Thursday was a big day because it was subtle, but you got that expansion of volume, 69 million. On Friday, you had 78, and yesterday we come downtown with 106. So today's going to be an interesting day to see just how this baby does shake out. The dollar, this dollar is something else, man. I mean, you can see yesterday you go higher. Now, the volume's dying on the vine, but the bottom line, man, is that this thing wants to go visit its friends up at this last high. That last high is 97,230. The bottom is 96,660, and it's like, okay, man, I got to see what's going on up there.
Right?
Yeah,
Yeah.
And, when I say dying on the vine, when you take a look at this, Friday, it had good volume, 30,000.
Yeah.
Yesterday, 16. Now it'll do, could even do 20, 22 today. You're at 86, so.
Kevin was talking about some of those retailers. How about Target? We looked at Kohl's.
Yeah.
So I mentioned at the top, I mean, 5.3% same-store sales open for more than 12 months. Always staggering when a company like Target, where you think that they might be maturing in a place where, I mean, where do they find 5% growth when, you know, you finding new customers that didn't know that Target was near you a year ago, right? I mean, that's what's always interesting.
It's impressive.
When you have such an established brand that can grow same-store sales.
Right.
On something like Target, 5.3, and so to get down to a big number also was their online. Let's bring down. So I wanted to get the number because it was like 25% that they grew online.
Yeah, and they have a great brand. They have a great.
They do have a great brand.
You know,
for being a discount brand, right? They definitely do.
And they have that big grocery store in a lot of those too, right?
Yes, they do groceries for sure. Yeah. Yeah.
Fiscal year profit 575 to 605.
I'm just gonna go back, all right? Because this one let's see. There we go. Fourth quarter. Yeah. So comp sales 5.3, and where are we in the online? Yeah. 2018 marks the 5th consecutive year. Comp digital sales have grown more than 25%.
Wow.
That's why the market really, I would say, between this number 5.3. And that number, 5 consecutive years, 25% online. They keep that up, they'll be a valuable company.
Totally, because, let's just look at this for a second. So, yeah, $74 billion. Holy cow.
Yeah, now what's interesting is they have no breakdown here, right? I imagine that once they get those numbers high enough, we're going to want to break that down because it's going to be about online, and they're not comfortable enough, I anticipate, just yet breaking that down. Not quite.
Let's go over to our man, Mr. Daryl Martin at Apex Investing. Daryl Martin, what's going on, brother?
Hey, how you doing?
Doing great,
Morning,
man.
Daryl.
Yourself?
Doing fantastic. So China's given us some volatility lately here, huh?
Yeah, China, man, that market is a little rocket ship. There's no two ways about it.
I thought everything was going to be good. Yesterday morning we started off with we almost got a deal, and then 10 o'clock rolled around, and the market rolled around too.
Well, did you see they also cut all their housing prices by 10%? But the largest housing company cut all their houses by 10% on the buy prices, and they're also cutting their automobile prices like crazy. So they're trying to do what they can to figure out how to stimulate things and get things going.
Well, that'll get us some stimulation.
Sure, right.
You know, who's going to pay the bills for all the debt that's out there, though?
We've seen when China tries to intervene, though. It's like that usually means there's problems, and that's really tough to intervene to the level that you can prop up a market that big.
Yeah.
So I think that's sort of what's been weighing on the markets here. So it's that whole.
And folks,
people, just reading the economics, the fundamentals there. China's massive, and I think what is it? 75% of their income is in real estate, or their savings is in real estate on families over there.
Okay.
Compared to like 25% in the U.S. So when their real estate goes down, it takes everything down.
Yeah, and what happens, folks, is that you can, like when I look back, I remember even 10, 15, well, let's see, 10 years ago would be, more than that now, because we're talking 2005, 2006. The whole world thought that China was going to go bust because they were building so dramatically, and they were called empty cities. Well, guess what? Most of those cities are totally filled up. Not only filled up, but they're making money hand over fist. So I guess when you get a country that has only been in capitalism, some sort of capitalism anyway, the last 30 years, that's what happens, Shanghai, man, the Shanghai just went from 2440 up to 3,000 in 2 months.
Not a bad pop.
Oh, my God. Amazing. So currency-wise, what are we looking at currency-wise out here, Daryl?
Well, I mean, pound and euro, right?
Yeah.
So implied volatility shooting up on those. So causing some good movement. And those are really, pound dollar, euro dollar have been the two I've been looking at today. So what about yourself?
Yeah, and we know that's all about Brexit, and that's the thing that between the pounds and the euro, that's what's going to move the dollar. It is, in the last couple of days, both of them were basically, slightly weaker. There's no doubt. The pound looks to me like it really wants to go topside in a huge way. I mean, you get two different, trends that have gone up, and they both have confluence on the way up,
But it basically just keeps fighting for that. There's a lot of positive expectations. They're going to figure something out, and it's hard to read. It's like a big soap opera going on over there. So
it's pretty crazy. That we're in March, right? And we've been talking about March 29th for years. And guess what? It's March of 2019, and is there any clarity? There is. I'm a little sarcastic in that the hard Brexit, there's some clarity, but
The hard Brexit there is, but
There
other
is.
than that, there isn't.
if you asked even 3 months ago, how much clarity are you going to have on, what is it, the 6th of March, 5th of March? You would have said, I hope more than we have right now.
Right.
But the market, avoiding that one thing of a hard Brexit, that's almost all the market really cares about at this point.
It seems like one day that, personally, I think there's going to be an extension, and the real question is going to be, is it a large extension or a small extension? And then the next day, it's like, okay, May might pull this off. I mean, every day.
When you say pull this off, what does that mean? I don't even know what her pulling it off is at this point. That's all.
Pulling it off is that they'll sign away exactly how it is right now. Meaning, because what she did yesterday is they gave $2 billion to a couple counties that have all the labor secretaries in it.
Yes.
And if they get them on her side, what she has on the table right now will pass, even with the backstop in it.
Okay.
You know, so it's like, okay, if that's, you know, this is like a game of chicken extraordinaire.
Yeah, that's how any negotiation really is. So, yeah.
Pretty intense.
It is.
Man.
It is.
Pretty intense.
It is, man. We'll see. March 29th.
At the end of the day, though, it adds volatility, which is good for us as traders.
Definitely.
So,
There's no doubt. Folks, you can find Daryl every trading day at apexinvesting.com. Daryl, you have a great one, safe one. Hey, are you getting cold in Texas, too? Or did it get up?
it has been insanely cold here, yes.
So it got down that far. Wow, man.
Yeah,
Wow.
single digits.
Okay.
On the wind chill. Yeah.
Stay warm, brother.
All right, buddy. You too.
Stay right there, folks. Tommy and I are coming right back. We have the Dow down 15, NASDAQ off 12, S&Ps are off 4.5. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 43. NASDAQ is off 8. S&P's down 2.5. Let's go to Mark in Colorado. Hey, Mark, what's going on, brother?
Not too much. How you doing?
Hey,
I'm
Mark.
doing great, man. I'm doing great.
Good. Hey, I wanted to see if you guys could look at the coffee contract for me. I've been following the ETF. It's called the J-O.
Yes.
It looks like it's doing an ABC down, but I really can't. There's not a ton of data on it, and it doesn't go that far back. So it looks like that's doing an ABC down to about $30. But it's kind of intriguing, and I've been watching it from a fundamental standpoint because I've been reading a lot of articles on how climate change is kind of impacting the growers and their ability to grow a lot of the coffee that people drink.
Yeah, I read some articles about that recently myself.
That's pretty cool.
Hey.
So let's take a look at it. So I see that this is a monster A to B equals C to D. Holy cow. So your 8 point is $1.31. First, I'm going to do the coffee contract, folks. So we're on the May contract. So 131.70 would ballpark this. Okay, so it's a 30-cent A to B, which gets you 79 cents, right? 79 cents. You know, you broke. Now let me see if the J-O. So now if we bring up the ETF, this is the iPath Coffee Sub-Index Total Return ETN. Yeah, same setup. Okay. Yeah, so your 8 point on this is 47. The B's 36. So what? $11. Gets you 28, right?
Yeah, 29, 30.
Let me bring this back now. Okay, so what I'm going to do here, so 28, we'll remember that, and I'm going to go back to, what I'm going to do, folks, is go back to the futures, but I'm going to bring up the KC1, the continuous contract, so we can really bring this back. KC1. Okay, so that's it. Put this on weekly. Ooh, man, if that's the case, this is going to be pretty intense. Look at this. Okay, so, well, I guess what I do...
I don't want to short it, but I'm looking at maybe when it might be a good time to buy it.
Yeah, no, this is what I would do. What's so cool about commodities is that, and you'd be able to find this out pretty easy, I think. I'd find out, like, what the production cost of this coffee is. Do you know what I'm saying? Like, what's it cost to produce it? Because what happens is that it can go underneath that and stay under that 2 or 3 months, but the reality is that if it does that, well, you know, that's when you normally get a pop. Now, we go back to 2001, it was at 41 cents a pound. So 94 is still pretty big. You know, I can see 64 or something. What number did we have? We had
80.
He had 80. Oh, well, the 80 can get there. 80 can get there easy, Mark. We're at 94. That's not a big deal. In fact, yeah, so we were at 87 in 2005. It took off at 67, and then went up to 306. Man, Starbucks and these guys should be making a fortune, right?
Right.
Yeah.
SBUX. I gotta see this for a second because there's so many people who are in the coffee business. I mean, it's like.
Well, it's the drug business.
Yeah.
It's good business
Well,
to
look
be
at that. All-time highs. Okay. Yeah, that makes sense. If your main product is going down, we know that Starbucks.
The ingredients, cost of goods.
Yeah. Yeah. It's not even close, right? Yeah. And no one's even expecting it to go down either. It's not like, you know, it's not like gas prices. No one keeps track of coffee prices.
Right.
Wholesale coffee prices anyway. Do you know what I mean? Hey, so do you get your skis on?
Oh, yeah, I've been on. We got a couple feet last weekend. So.
Holy cow. Couple feet.
Not in the Front Range area. We got like 4 to 8 inches in the area, like the Front Range, Denver, Fort Collins.
White gold, right? White
tons
gold.
in the mountains. Yep.
You know, I met a guy last night that only moved to Denver 6 years ago, and he's telling me that, you know, I haven't been to Denver in a long time now, and he was saying to me, you guys have so many cranes downtown. It's insane,
yeah, they're
right?
building like crazy. Yeah.
That's pretty wild, man. That's, you know.
Yeah.
Denver's always been a growth place, folks, but, you know, years ago, if I go back to, 2000, it was a growth place because of the mining structures more than just real business. And that sounds like those high-rises are real business now, right?
Yeah, there's a lot going on. There's a lot of energy companies, but there's also a lot of other companies coming in as well.
Yeah.
Companies and stuff like that. Yeah, the whole Union Station area, which used to be kind of warehouse district, is now really exploded.
And what was the place where that whole thing, where Coors Field is and all that? What is that called? What's that?
That's called Lower Downtown, or Lodo.
Okay.
And then Union Station is right near there.
Right.
So.
Because that's where it actually started, right? A lot of that growth, right?
Right. That helped, and then they renovated the old train station, and then everything's exploded around that.
Wild, man.
Yeah.
Gotta love it.
Yeah. Well, thanks for your time, guys.
Okay, man.
Thanks,
Have
Mark.
a great one. Have a safe one.
Bye.
Market-wise out here, little flat market. So let's go inside that NDX and see strength versus the weakness out here this morning. Look at this. Whoa. C-Trip is up 16%.
I'm guessing it's still earnings season, and they're coming with some earnings.
Let's take a look. So the low for the year is 25. The high is 51. That popped in an extraordinary way. Yeah. Dazzle wall. Let's see.
Maybe the second one.
Okay, so
Looks like earnings per, basically,
oof,
a good one, right? 13 versus they were going to lose 2 cents.
that's huge.
Yeah, and the range there has been pretty wide, though. Check that out, from a loss of 6 to a profit of 21. One of those analysts had a peg that they were going to do well out there. So for the first quarter of 2019, company expects the net revenue growth to continue at a year-on-year rate of approximately 18 to 23%. Quite a number.
Wow.
Yeah.
That is amazing. So let's just take a look and see what they're. Whoops, not that one. Yeah. So look at those growth. Air ticketing, they're growing at 42%. Hotels, 35. Package tours, 31. Advertising, 85. Oh my God. Corporate travel, 27. So let's see. So this is like a price line?
Yeah.
Okay. I see. Online travel agency services. Yeah. That's a big number.
Shanghai.
Wow. Yeah, Shanghai. 37,000 employees. Big number. No two ways about that. And you see the, I wonder what Office Depot is doing today, because Office Depot is just did a deal with Alibaba.
Okay.
And not doing much to the stock, but this seems like it could be a decent opening. So Alibaba, business-to-business trading platform, has forged its first U.S. partnership with a large company as it teams up with Office Depot. It's going to create a new online destination to assess the business supplies distributions network.
To access the business supplies distribution. That's
yes,
important.
thank you. To build out its offering to small businesses in the U.S. Yeah, so the partnerships gives Chinese online realty access to 10 million business customers and 1,800 sales agents. This is going to be an opening for them, man. If you've never been on Alibaba, folks, it's a pretty amazing site. I mean, you can get anything and everything exported from China to your doorstep in a few days. Stay right there, folks. Tommy and I are coming right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's down 48, Nasdaq's off 1, S&Ps are off 2, and Hertz. This is going to be pretty intense. HTZ, taking a look at what we have happening with Hertz. So Hertz is down 270 today, and that is on the news that Carl Icahn, bottom line, hired Morgan Stanley, I think, to move some shares, and he moved some last night. So Hertz is having a worse session after the top holder sent shares tumbling. Carl Icahn this morning disclosed that he sold 5 million shares on Monday. People familiar with the matter told Bloomberg that Morgan Stanley was lining up buyers to unload a total of 5 million. The sale price at $19.60, 2% discount to Hertz's last closing price. Now, that's not the problem. He just sold 5 million. Where the problem is, folks, is watch this. This is a position that he's had a long period of time, and he owns 24 million shares.
Sure.
That's a problem. You know, that's a big number, folks.
And to be fair, he owns 24 million shares after the 5 million.
Yes, thank you.
Yeah.
That's pretty intense.
Yeah.
So, and when you look at this chart, what you're going to see, this has been a one-way ride, and that's unusual for him. You know, bottom line, you know, you're going back to 2014. It was $125 share. Equity.
Yeah. Hasn't really moved in 2 years, though.
No, and he's been looking to turn it around. Well,
Yeah.
And what the market doesn't know, you know, is this the turnaround? He just wanted to move out some money. What is he thinking? You know what I mean? But,
Yeah. I mean, that's quite a substantial position. He could just want to hedge his bets a bit, you know? Do you have to own 35% of the company? Can't you own 28% of the company, right?
Pretty intense, man.
Yeah.
There's no doubt about that. We take a look at the other higher volume equities out here today. You have GE is up 15 cents. Micron's taking a hit. That's down $1.
GE is basically flat. It was 0.1, 0.5 pennies.
You get Target, Tesla's the one. Target is trading up $3. Salesforce, now Salesforce come out with numbers, so
Yeah.
these numbers were a little light. They're not hurting the stock though. You know, Salesforce yesterday got down to a price point of 155.42. You're at 154. Not the end of the world inside of that. Go back to the NDX for a second. What was interesting is that they had a story out here today on the Bloomberg, and what it was, folks, is that the amount of hedge funds that own the FANG stocks, once again, with the, when the FANG stocks basically go up or down, what the story was about is that hedge funds buy the exact same stocks, and they're in the same stocks. But then what ends up happening, if they go south, they pull the trigger in a second.
Sure.
So, boom, it goes all the way down. Bottom line is that now they're back in those positions. You know, so it's going to be intriguing watching these. And the largest position that is Google. That these, maybe we can pull it up right here. But Google's the largest position that the amount of hedge funds are in on a one-way bet. And of course, you know, Google's not a bad bet.
Right.
That's the other side.
I would agree.
Yeah, exactly. Amazon, let's go take a look at Amazon out here.
Speaking of not bad bets.
Yeah, seriously, man. And so Amazon's still trying to get up into this, that, when it popped up at that high up there was 1736. You know, we get 1707 this morning. We'll see how that baby, can get up into that level, or it is going to die on the vine. Netflix, NFLX. 350. Not a whole bunch there. And then you got, be interesting to see how let's go over to those S&Ps for a second, because what I expect you're going to see out here, folks, as we go through the day, is you're going to see an expansion of volatility. And what we've had thus far is that, you know, you really had a sideways market. Well, we got a low of, what, 27.83 or 27.86. The real kick is going to be, let me just see if I can help him out now. Is that what am I using? I guess I'm using number 2. You know, we're coming right down to where the low was out here today. That low was generated at 950. So we'll see whether it breaks it. If it breaks it, folks, you'll be right down where we were yesterday. And that was a fast move yesterday, man.
Oh, boy, but was it.
That was definitely a fast move.
10 o'clock till 1 o'clock, basically.
Yeah.
Yeah.
And then the cavalry came.
Yeah?
The cavalry came in at the close, folks.
Why even? It was before the close. The Dow clawed back 200 points from that low at about 1 o'clock. So the last 3 hours of trading, really, it just kind of trickled, and then got a little pop coming into that close.
Well, you know, when we take a look at the GDX, what do we have with the GDX? Now, what you had out here yesterday, you had a nice rejection of lower price. You had lighter volume. And we'll see if we get any juice going on inside those equities. Barrick and Newmont. This is going to be interesting watching this shakeout. So they are going to have a meeting. I think it's today. Let's see to meet Barrick. Let's see. Yeah, today's Tuesday.
Yep.
So they're going to meet today, folks, and they're going to meet in New York, and they're not going to meet. The discussion will not be about, that's what the article's saying. It's not going to be about the proposed merger, a hostile merger that Barrick is looking to take over Newmont. It's going to be about their mines in Nevada as to can they make a deal.
Sure, it's about Newmont's proposal to work together in Nevada. Yeah. Which, of course, is kind of like their contrary opportunity, possibility, as opposed to the takeover of Barrick over
right.
Newmont.
And that might be, you know, their bottom line is that they might just get something done there, you know, because that is in both cases, in both of these companies, folks, Nevada is where they have the substantial assets that are very inexpensive in a great area. That's what it really comes down to. You know, it's amazing, and I didn't realize that, you know, so Nevada is the 3rd largest producer of gold in the world. You get Australia's first, okay, it's number 2nd, but Nevada's 3rd. But the wild thing, folks, is that the Carlin trend, and that's where all the gold is. It was really in 1980 that this thing exploded. That's not that long ago.
Definitely not.
You know what I mean? It's like, you know, you go to South Africa, you're talking a couple hundred years ago.
Sure.
That's pretty intense. And so what happens is that they both are actually right next to each other. And Newmont is the one that discovered it, though.
Okay.
And then Barrick came in afterwards.
Okay.
So what's happening here is that Newmont has more facilities to crush the ore and to get it out, but Barrick is has more ore. So that's where the thing comes in. Like, I got more ore, and that's, you know...
Synergies, right? That's what they're
Exactly.
talking about.
And
There
if
you
they, you know, if they can get... If they use the same facilities, same trucks, guess what? That kills a lot of overhead right
The
there.
other contrary is that, well, that's why Barrick wants it all, man. $7 billion in synergies, right? I mean, that's what Bristow's putting out there.
Totally.
So we'll see what...
Stay right there, folks. Tommy and I are coming right back. We have the Dow down 60, NASDAQ off 5, S&P's off 4.5. Come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And folks, as you come over to our website at TFNN.com, we want to keep you healthy. And our man, Mr. Nico DeHaan, also wants to keep you healthy. In that aspect, bottom line, he's got a great newsletter. This promotion ends this week, end of this week?
Sunday, that's right.
Okay.
So you can get 25% off Health Signals. Comes out twice a month, the 1st and the 15th. So Nico just put a new issue out Thursday, I believe. He'll get another one out in 11 days on the 15th. You can sign up for any subscription length, whether you're choosing a monthly, 6-month, or yearly. And all you got to do, we're signing up for Health Signals. You just head on over to the product page, use promo code HEALTH at checkout, and you'll save 25% off whatever that first payment is. To do it quickly, there's your $85, right? You enter health, apply that code, and boom, there's your 25% savings. So you're paying only $63.75 for the whole year, 24 issues. And they are great issues, man. Nico packs them full of information twice a month, probably 20, 25 pages in there, just articles, tidbits, stuff that he talks about on his program. Of course, check it out, the archives of the program. Nico is in there this morning. If you want to check out the archive, you just go over Tiger TV, and all the archives, folks, right under here. Okay, we have the schedule, live programming, TFNN show archives. There's your recap. We got interviews, and then you scroll down. You'll find each hour. There's our 10 o'clock hour. You want to watch those. Steve Rhodes, Basil Chapman, Larry, the interviews, and Living a Primal Lifestyle. So Nico's show, if you want to check that out later tonight, the weekends, of course, all those archives right under Tiger TV. And check out that Health Signals on the front page. That will run through Sunday, March 10th.
I love it.
Totally.
And folks, if we get over to this, is quite an article. This is pretty cool. Just quickly. So the S&P yesterday had an inflow of 1.47 billion.
The spider, yeah.
Yeah, and the it's interesting because it was down, so they're buying the dip. That being said, the outflow for the year is 12.1.
The past year, last year.
Yes.
Yeah.
Stay right there, folks. We got Fast Market coming up. Then we got our man, Mr. Basil Chapman. Steve Rhodes, Dave White, be back this afternoon. Thanks, pal.
Thanks, man.
Wow! Go get him, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.